GetCrack. Wake up, motherfucker.
Yo, it is February 23rd, 2026. All right, let's see how the market's doing for the pre-market. Let's go and see what's up with that. All right, let's see here. All right. Okay. All right. Let's look at Bitcoin. So, when the futures market opened, Bitcoin just sliced right through that yellow zone. So we went to the bottom of the pink area and we bounced off. All right. So now let's see what happens at the open. That's my curious point here. Will it just fail to get back through this yellow area and just go straight back down to the bottom of the pink area? If it does that, I might not have to wait for Nvidia's earnings to do its worst. We might be able to get 60K or lower right there, and that's where you want to buy. All right. Bitcoin. So for a quick trade, we can trade this all the way back up to potentially 80 something thousand, right? Probably 84, maybe at best. But I'm guessing like I'll get out at 80K. So I'll just MSTR. So you can use MSTR, or we could use something else. Right, we can use the leverage MSTX, 2x leverage this sucker up. So we can get between, let's say this thing drops back down below 170, 1.7. Okay. Good morning, Gobbly. And then we could trade this all the way back up to maybe 350. I don't know. That'll be good. That'll be good. That'll be something good. The other one is Moderna. So if you remember COVID, everybody ran out of there pretty quick, and it had earnings. They dropped some news. FDA did not approve their flu vaccine, dropped down to the green line at 36, close to 36, and we recovered. So earnings and then recovery a few days after. I'm liking this. Very good. This is what I want to see. Now, what's the potential here? Well, this thing might go back up to 100 in the next few months. Who knows? Maybe if things go well, it could even go higher if people keep rushing into biotechs again. Biotechs, if you look at the whole biotech sector, small caps mainly, and this one, XBI, you see it's been in a holding pattern since December. It's probably going to continue its way up once interest rates are lowered aggressively. So if interest rates start getting lowered aggressively, this thing could probably return back up to COVID highs. They love low interest rates. All these small caps, they need to see cheap debt to continue their operations. Okay, so this will be a good trade with Moderna, I think. So if you are interested in Moderna, you could just get the stock itself, or if you don't play options, you want leverage, then there's a new ETF that was released probably a month ago. MRNY and Z and X. Yes, MRNX. It just got released several weeks ago. And you can see it's, if you if you're a gambler, yeah, you could have bought this right before earnings when it got its little hit on the news and got it 15, and you could have got 100% right now, right? So if Moderna itself is going to continue up, yeah, you could leverage yourself up 2x. Why not? So MRNX is another one I probably would recommend. I'll be like, oh yes, 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 yes. This will be a good trade. Okay, so that's about it. Now for those things. So let's see. QQQ. You see, we're still under that zone. So all last week was nothing. no result, right? As I expected. Even with the tariffs being repealed by Supreme Court, the market already counted that in. Whether they repealed it or didn't repeal it, it didn't matter. Markets kind of been betting that eventually the tariffs would be repealed in some form or another, either by Trump through negotiations, because that's what he does. All he does is like gives out the worst case outcomes and then walks it back. That's called the taco trade. Trump always chickens out. So the same thing with Iran. You could put as many aircraft carriers as you want into the Strait of Hormuz and whatever, but I think eventually there won't be anything serious. We might, beat them up a bit, slap them around, but that'll be the end of it. Probably maybe a weeks long attack or something like that. So that might be what will cause and trigger a sudden exit out of certain stocks. But I think industrials, energy, those things are clearly been leading. So you look at energy here, right? Since the New Year's, people have been rotating in here. And if you look at software, they've been exiting here. But we're probably going to have a reversal. This is all probably oversold and it will revert back. Okay. And the same thing with energy and industrials. This, we might get a bounce, but I wouldn't be surprised if we just lose it altogether and people will just exit out and take their profits, because there will be short-term people that won't hold, and the rest of us can get in on stocks that I need. So the boomer portfolio I've been making, I'm waiting for that event to happen. Then we can move in, and there'll be a lot of other things like food and even the tractor stuff like Deere. Definitely very good earnings. So tractor, farm equipment, fertilizer, all these things will definitely come into play. I think the whole grains market, soybeans, corn, probably, yeah, it's probably done goofing around, going sideways. They've been going down sideways for quite a bit. Soybeans, let's see, soybeans, yeah, sideways. You can see that all the grain stock futures have been going sideways for quite a while. Okay, from late last year. So we'll see how that goes. Morning, Garion. So yeah, that's what I'm hoping for. So then I can start my Substack. Then I tell everybody like, okay, here's the portfolio. Here's what the price I'll buy it at, and then you could try to copy what I'm doing. So this will be the first time I'm doing it. Usually, I'm very lazy. I don't go around trying to, make portfolios and stuff. This is kind of like the work of an actual fund manager, right? I'm making like a mutual fund or ETF or something like that for people, where I aggressively try to balance everything. I'm going to attempt, when I start it, to only change the composition of a portfolio maybe twice a quarter. So I'm going to restrict myself. I can't like actively try to trade. I can't actively try to do anything funky where I just use leverage. I just use straight stocks and ETFs. That's it. No tricks, no cheating. If I can do that consistently and beat the S&P 500, we'll move on from there and try to expand it out and make different types of portfolios for people. Okay, some people might want more aggressive performance but higher risk. Some people, and this will be tailored to different people, right? That's why this business is not easy. Everyone's in a different stage in their life. Some people are younger, they want more aggression. Some people are older, they want more stability. And that's why people get paid to do that. That takes a lot of work. It's nobody here is going to give you a crystal ball and say like, yeah, yes, I know from here to here, this is what's going to happen to this stock between this time and that time. If I knew that, I wouldn't even bother telling anybody about it. I would just keep it to myself. Right? Like if I had that crystal ball, I'm keeping it to myself. It's like I'm giving away the secret sauce. Everything I tell you here can be found in the public, but it's the problem with that is that most people are impatient. That's why they lose. They're impatient, or like, they let their emotions get the best of them, right? They become greedy when they should be fearful, or they become fearful when they're greedy. And that's why you just look at charts to see what the other people are doing. Like, can you tell where, the big money is being patient, where the big money is trying to be, getting the hell out of there? And you won't know that, right, until like we see the final effects, and that's hindsight. So let me give you an example, okay, with George Soros. So back in 2011, there were two guys. George Soros got out of the gold market in 2011. Another guy stayed in the gold market. Okay, so I think this will give you an example, of the philosophy. So there's the buy and hold type, and then there's George Soros type. Okay, so those are the types of people we want to analyze, and then you could compare and see what's up. Okay, so if you remember this, I talked about reflexivity. This is George Soros' philosophy of things. Okay, let me put on some background music. Okay. Morning. And on with some other stuff. Oh yeah, earnings. Oh man. Okay. Let's see. I want to get through there. All right. So George Soros' theory of reflexivity, okay, is based on the idea that investors base their decisions on their perceptions of reality rather than reality itself. So this is what you see in earnings. So a lot of times people gamble on earnings. I don't, because it's heavily dependent on what people expect. All right. So people will complain that maybe they'll say, look at Nvidia. Nvidia is overpriced because such and such a reason. It doesn't matter. People will buy Nvidia at a price they feel is correct to their perception. If they perceive that Nvidia has a lot of growth in the future, they will overpay for Nvidia because they expect the future growth to be a lot higher. So they're willing to overpay for what it's really worth today for the future, right? So that's the perception. So that's why you see this, the stock price is going up and below the actual fundamental metrics. That's why I don't believe in fundamentals. I don't believe in efficient markets. If you believe in the efficient market, then the stock price should hug this earnings per share. So every time there's a new earnings release, it should be close to this earnings per share price. Okay? But that's not true. People get hyped up and they'll overpay for a stock. And then when things turn around and then all of a sudden the growth is no longer there, they freak out and oversell the stock. So if you can figure these movements, these psychological effects of people's emotions, you can make quite a bit of money, right? Because you will place bigger bets than they would on the upswing and then short it with a bigger bet on the downswing. Of course, you got to be able to time people's emotions just as well as a company's fundamentals. This feedback loop between expectations and economic fundamentals can cause price changes that substantially and persistently deviate from equilibrium prices. Equilibrium meaning that if you believe in efficient market theory, that the stock price of that's being created every day is the correct assessment of that company for that day. Soros believes that reflexivity contradicts most of mainstream economic theory and can significantly shift our understanding of economics under modern economic models. He explains that if investors believe that markets are efficient, that belief will change the way they invest, and that in turn will change the nature of the markets they are observing. Soros views the global financial crisis as an illustration of that theory. Okay. Now, let's go back to 2011. Okay, so And this is when Soros sold gold. Okay, let me get that. Soros dumped most gold in Q1. Paulson stays put. Paulson is the gold bull here. He bought and he held. And this was May 16, 2011. Billionaire financier George Soros, who called gold the ultimate bubble, dumped almost his entire $800 million stake in bullion in the first quarter, well before a commodity slump blamed partly on reports he was liquidating his holdings. Famed gold bull John Paulson held his ground, but Soros was joined in the retreat by several other big names, including Eric Mindich and Paul Turjaji, according to 13F filings with the US SEC, so Securities and Exchange Commission, that provide the best insight into where hedge funds are placing their bets. And 13Fs are released every quarter. So by the time you know what they're doing, you're already like 3 months, 1 to 3 months late in figuring out what they're doing. Soros, who has been bullish on gold in the past several years, cut his holdings in SPDR Gold Trust, so that's the GLD ETF, to just $6.9 million by the end of the first quarter, compared to $655 million in December, becoming the most high-profile investors to turn his back on one of the market's best-performing assets. Okay. All right. So I don't think I need to read any of this. Blah, 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 blah. Now, let's look at today. All right. So what's happening today with this Paulson guy? So what did he do? He held, right? He held for, what is it? From 2011 to now, so almost 15 years. After 15 years, John Paulson is finally winning big on gold. Billionaire is spending $800 million to buy a big stake in an Alaskan mine. So that's him. John Paulson made a vast fortune betting against the U.S. housing market in what was dubbed the greatest trade ever. And his next act, a years-long wager on gold, is finally turning out to be another great trade. More than a decade and a half after Paulson went big on gold, the billionaire investor has emerged as one of the winners from the record-setting surge in the price of the precious metal. So, blah, 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 blah. Rather than cashing out, Paulson is doubling down, tossing in $800 million to buy a big stake in a remote gold mine in a rugged region of southwestern Alaska. There's only one reserve that in physical form will protect you against all these things for literally millennia, said Paulson, rattling off a list of scenarios ranging from inflation to the confiscation of assets by governments. Okay. So, did Soros make a mistake in selling gold? Right? That's what you should be asking. Now, let's look at the chart again of gold. So, let's look at gold. All right. Now, what did this do? Soros sold it way back when. Here, right? Way back when. Here. 2011. So I think he did well, right? I don't know when he exactly bought it, but let's assume he bought it somewhere in the 05s to 08. So that was a good place to sell, honestly. 2011 was when it started just going sideways, down, sideways, back up. But essentially, gold didn't go anywhere for 15 years. So if you go here, let's say he sold it, what, January 2011? So he missed out on this sideways move. Of course, maybe Soros came back in, in COVID. He added gold. We don't know. I don't know. I'm not looking closely into what he's buying, right? I guess we could try to go through the 13Fs and see if George Soros bought back some of his gold that he sold. But he left this whole sideways move. So is that a good thing or a bad thing? It depends on what he used that money for. Let's say he took all that money he made from gold and bought Nvidia in 2011. I don't know. I don't know if he did. but let's say he did, right? So if I bought Nvidia at around 2011, I bought it here at 37 cents, right? So if Soros did use his money to buy Nvidia at that time, then I think, he did a hell of a lot better than gold. So the reason I bring this up is that, like, there's a limited amount of capital you have, right? Even the richest people on earth have to think about where do they place their money. So you have to worry about where you place your money. And we actually have a lot smaller quantities of capital than these rich guys. So we have to be very judicious in where we put our money. This is opportunity cost. If I stayed in gold for those 15 years, I finally have a profit, right, from those 15 years. Because I could have took that money. I could have got out in 2011. I could have bought Nvidia, got my money there, sold just before gold started going up, like late last year. Gold only really started running up like in late 2025, or like, let's say if you actually got gold in 2024, that's where I told people to buy gold and silver, 2024. But even then, compared to Nvidia or Palantir or something like that, it still isn't worth it until like you come in late. So that's the question you have to ask yourself. If I stay in this thing, I'm missing out in something else. That's the opportunity cost. So if Soros said those things, it wasn't necessarily wrong to sell it at that time. Because if the money was placed in something better, obviously I assume Soros did put it in something better than gold for those 15 years. 15 years is a long time for something to go sideways. And now everybody's chasing gold and silver, right? Okay, so just like people are going to chase Nvidia now, like really late. Hey, what's up, Diwali? So that's something you always have to put in the back of your mind. If I'm in this thing, I'm missing out in somewhere else. So that's why a lot of people are trying to run into semiconductors or software. And I'm like, you know what? We've had our run. We did good here already from April. Isn't there something better? Yeah, there could be something better, right? Oil is the one that's about to move big. Like, so don't stick around and even gold, right? And silver is probably going to go sideways for a year. If I'm going to be in something for a year, I want to be in something that's really outperforming the S&P 500. That's the key. That's the key to beating, hedge funds and all those other guys. Most hedge funds barely beat the S&P 500 over time. So over 20 years, like only a few of them can consistently beat the S&P 500. Druckenmiller, who used to run his hedge fund, always had 30% returns every year. That's unheard of. That's probably like the benchmark hedge fund to beat. But most hedge funds don't even get close to that. So that's why I say, like, a lot of you guys are better off doing things yourself, because I think you can do a pretty good job on your own with just using simple things like charts. If I look at the XLE versus S&P 500 right now, you see it's breaking out of this long-term downturn. And what this means is that a lot of energy stocks cannot compete with the S&P 500. So why would I buy energy stocks if I just buy S&P, right? So if I could just buy SPY itself, I will beat XLE, So I will beat XLE for sure. But now it's changing. So XLE was going sideways since 2022. And if I bought the S&P from 2022 here, October was the low, and I kept holding all the way up. Even I hold through April, it doesn't matter. You see, I'm still doing a lot better than holding XLE. So if I bought Chevron or ExxonMobil, like, look at this, right? Flat. I could have been in Nvidia or Palantir during these years and would have made way more. I could have been in SanDisk, Micron, whichever. Right? So, but look at that. Now we're breaking out. There's a change coming. So all these people wanted to talk about AI, forget that. AI's done. I made my money with the AI through semiconductors. Now it's time to look for something else, because if I stick with AI and AI starts underperforming oil stocks, I'm losing my opportunity. There's a cost to it. Time is money, right? If AI is just going to go sideways now, okay, you can look at IGV, you can look at all these stocks and go like, damn, they're cheap. They're back in April's lows. But like, so what? So this thing goes back up to 95 and then goes back down to 80, goes back to 95, goes back down to 80 for another year, 2 years. I'm not sticking around, bro. I'm going to go to oil, because oil is the one that's about to explode. It's already exploding these past 2 months. So that's the reason why I told you guys to get into UwU. I've been exiting out my XOXL from April. It's done good. You got it around here, 7, 8, 10 bucks, 15 bucks, goes up to 67. It's good. We're good. We got our money from it. It's time to move on. So it's just like with Soros and gold at that time in 2011. Maybe he bought Nvidia. I don't know what he bought, but I'm sure he's smart enough to have bought something better than gold. So he's not crying. He's not crying. Oh, even if he missed out on that whole big pump in gold, he's still not crying, right? He's not crying. He's not losing sleep over it. So there's always a trade to be made. Every day there's a trade. Every year there's a trade. Every quarter there's a trade. There's always a trade. And so we always have to look at the new opportunities that's emerging. All right, so that's my long-winded explanation of that. Okay. All right, let's go back. Market will open in 15 minutes. So back here. So close that. So here's an opportunity we could look at, Bitcoin. So the cycle analysis right now shows that, if this is to be believed for now, we should have a good tailwind here going from now up until probably tax day or just after tax day. This would be great if I see Bitcoin drop and retest 60K and even go below 50K to shake out all the weak hands. You shake out all the weak hands, and then the big hands come in, support it back at 60K, and then we can finally go up to 80. So we got about a month's time, right, to go back up to and recover to 80. That'll be a nice trade in MSTR. So hopefully that'll happen. But we have to get through Nvidia earnings. Okay, that's probably what's gonna really shake the whole market. But yeah, I could see it go up from here. So Nvidia will report earnings on Wednesday after the close. That's really the only one that matters. All this other crap doesn't matter. It really doesn't. But I will watch some of these, like WGS. This one's interesting. Some genetic stock that's kind of wild. Yeah, well, I'll cover that one. HIMS has been a favorite of mine in 2024. I haven't really returned to it because it's been going sideways, but maybe it'll bounce off of support. We have Krotos, so that's a defense company, small one. We got Home Depot. Let's see what else. Axon, the body camera. This one I used to like at 2025, but haven't, really, or 2024 into 2025, but I haven't really looked at it much anymore. It's gone sideways too. Oh yeah, we have some quantum computing stocks like D-Wave, so QBTS. We have CoreWeave, so anybody that knows about CoreWeave and AI, so CRWV, so they do a lot of the infrastructure stuff, data center stuff. I think OpenAI has a contract with them, so that's going to be important. But in the end, NVIDIA is the one that matters. And then you have Salesforce, CRM, Snowflake. So those software companies, IonQ and other quantum computing, Snowflake, NSOW. And we have uranium on Friday, UwU, 4 U's. We also have energy drink, CELH. Okay. And we have VST, some other energy company. Then we have Baidu. So one Chinese company to look forward to. But yeah, I think everybody. Oh, Tempest AI. I forgot about this one. Oh yeah, TEM. Nancy Pelosi used to own this one. I think she sold out. So Tempest AI. I think they do biotech or something with AI. We have HP too and all that. All right, so let me change up the music here. And yeah, that's about it. We have TJ Maxx, TJX. So that one's kind of retailer. That might give you an idea of how the consumer is doing at the lower end, I suppose. Not as low as Dollar Tree, Dollar General, but midway between that and Walmart and Target. So something like that. I don't know. So I don't play the retail stocks, but I think it's good to look at them from time to time. All right, let's see. What's some tweets we got here? U.S. debt crisis is set to get even worse. Federal spending on elderly programs is up to a record 9.4% of GDP. This is up 56% from the 6.0 level seen in the late 1990s, according to the CBO. This is also projected to increase to a record 11.3% of GDP over the next 10 years, driven by healthcare, inflation, aging demographics, and lengthening lifespans. Life expectancy at age 65 already hit a record of 19.7 years in 2024, meaning retirees are drawing benefits longer than ever before. Yeah, like my parents. So, combined with interest payments, elderly programs are now the primary driver of the federal budget deficit. As a result, by 2032, Social Security will no longer be able to pay full benefits without reform. Oh boy. Well, my parents got some few years. They don't really care. They get pension anyway. So even if Social Security starts cutting them down, I don't think they'll care too much. They'll definitely whine though. So yeah, this is the projected growth of elderly costs for the government. So there you go. So I don't want to start a generational war here, but if you Zoomers and Gen Alphas want to start rioting because you're paying for your parents and grandparents, then by all means go for it. All right, Warren Buffett's Berkshire Hathaway is now sitting on an all-time high of $382 billion in cash, enough to buy 480 companies in the S&P 500. So why is Warren Buffett? He left. He retired from Berkshire Hathaway. You know that, right? So he's done. But just before he left, he's just kept adding to the cash pile. So right now, his whole company is just in cash. So what does that mean? Does that tell you something? I think you guys better watch out in the coming years. You guys better watch the F out, all right? Because there's a reckoning coming down the pipeline into 2030, I bet. I'm sure of it. And other breaking news, the Stargate joint venture between OpenAI, Oracle, SoftBank hasn't staffed up and isn't building OpenAI's data center per the information. I don't know what the hell this means. So let me look at these replies. I'm really not that knowledgeable in AI as most of you younger folks are. But this guy put this picture here. Let me see if I can zoom in. Intel. The $500 billion AI project is stalling out. The reality, the highly publicized Stargate joint venture between OpenAI, Oracle, ORCL was the ticker of Oracle, and they'll report earnings sometime later into next month. I think. SoftBank is the investment firm in Japan run by Motsuatsi-san or whatever his name is, Yoshoami. I don't know. It's a Korean dude who grew up in Japan. He runs this thing, and he was a big, investor in ARM, Nvidia, a lot of AI stocks. Hasn't staffed up, and isn't actually building OpenAI's data center. The pivot: OpenAI still needs compute, but they are quietly pulling back from building their own physical infrastructure via SoftBank. Bank. Instead, they are just signing massive direct leases with Oracle and CoreWeave. So CoreWeave will report earnings Thursday. So after Nvidia, CoreWeave is the stock to watch. So CRWV. So by Friday, we'll see where the NASDAQ wants to go. If we are going to go down, if none of these things are true, we will know it by Friday, right? Morning. Because the market will sniff it out. We'll look at what the results are. We'll say, hold up. Are you guys really building a lot of stuff for OpenAI, or aren't you? Because if you don't believe in OpenAI, then why should we believe in OpenAI? And the whole NASDAQ will start crashing again. So good luck with that. I don't know which way to bet, honestly. If it does pump, if the NASDAQ does pump, then guess what? Bitcoin should easily get back up to 80,000. I'm just hoping that Bitcoin crashes to 50K first, because I'd rather buy it at 50K for a trade to 80K than buy it back at 60 something K to go to 80K. You know what I mean? There's a better risk reward for a trade at 50,000 in Bitcoin. So hopefully Nvidia's earnings is bad, crashes the NASDAQ on Thursday, and then I can buy up all the Bitcoins for a trade before CoreWeave. CoreWeave earnings comes out, everyone gets happy again on Friday, and we pump, Who knows? But then we could be at war next weekend, right, with Iran, and then it will just crash again anyhow. So I don't know. Too many variables. I really don't like trading like this. I'd rather just have a trend. That's why I always tell you guys, I like trends. Have a nice trend. Then you could just buy the dip and it goes back up. Buy the dip, it goes back up. I don't like this sideways crap. This range where you just go like, I don't know, and the market just goes up and down on any kind of news story. That's really annoying. So because that requires you to know in advance what the news is, and also know what people's expectations are of the news. Because I bet you a lot of people predicted that there was going to be a big movement in the NASDAQ, because I saw there were a lot of bets on the options market just before Friday. People knew what the news was going to be before it was released by the reporters, right? They already sniffed out what the Supreme Court was going to do. But you look at the way the market moved, barely anything. There was no 2 Sigma event. So whoever bet on those events probably got burnt anyway, because if they bet that the market was going to go up, but it didn't go up as high as it was expected, they might have still lost money. That's the trick you have to play when you do options. It has to hit a certain price before the expiration, depending on how much risk they put into it. Because we had a big options expiration on Friday. Okay, so every third Friday of the month there's an option expiration, a big one every month, and then the bigger one will be every quarter. So the third Friday of the third month, so next month, third Friday, we'll have an even bigger event, all right, for options expiration. Anyhow, okay, you can take a screenshot of that. All right. Let's play a video. We got 6 minutes before the market opens. So let's play this video.
Let's call that preliminary supply there in mid-September. And yeah, you can see that really big volume spike that Roman just highlighted. Now, note the symmetry. The other part that's so interesting about this chart is draw the support line there. And we can see that it has made no net progress above the, in contrast to the mid-cap S&P 400, it's made no net progress above the buying climax of October, late October. And look at what we're getting now with this rally. This has the distinct look because it's underneath overhead supply. You can see supply there in the middle part of that structure. And if it can't get going and get back above that, back towards the prior highs, and starts to work back down towards support, this February low is like a local minor sign of weakness. And I think that is in and of itself telling, because look at all the volume that came in on that break in late January into early first week of February. Yeah, look at all that volume. I actually am just a tiny bit short this, and partly because I think this is maybe the place. This is for the progress from here. I'm very curious whether it can turn down and go to the support line and break it. And then this is going to look an awful like completed distribution to me, Roman.
Okay. All right. So he's looking at the ETF MAGS. This is the Mag 7 ETF. Mag 7 being Microsoft, Google, Nvidia, Tesla, Meta, or whatever, and some other ones I forgot. But these are the stocks leading, the 7 stocks leading or Amazon, I forgot Amazon, right? S&P 500, because about 40% of the S&P 500, because it's cap weighted, it's market cap weighted, is composed of just 7 stocks right now because of how fat they've accumulated. The prices of those stocks have went up so far that they dominate the whole market. If you just look at the S&P 500. So out of all the 500 stocks, 7 of them takes up 40% of the weight. These 7 stocks matter. Nvidia being like a really keystone stock because of the AI narrative. Now, if we look at this, right, from a Wyckoff, these guys are Wyckofians. They look at it and they analyze it that way. They're saying that it can't get back up into that range once it breaks down. That's what he called the ice. Okay, the ice. Okay, so let's look at a chart. Right? So I draw those lines for a reason, right? I draw all these lines everywhere for a reason. Now I have my own index. Let me see. Right here. So I basically take the S&P 500 and then I remove out the 7 stocks. Okay, so Meta, Tesla, Nvidia, Amazon, Google, Microsoft, Apple. This is how it looks right now. Okay, this is the first time we've broken on a weekly basis this 18 moving average. So let's draw some lines right here, right? Let's say that, and then we can draw another one here or something. Maybe I'll just draw it here on this area. Maybe that's better, right? So if it starts drifting lower, okay, in the coming 2 weeks, 3 weeks, 4 weeks, and it just never gets back to this 3,200, it just keeps on drifting lower, because we'll find out. We'll definitely find out after Nvidia. Nvidia is the last one, the last of these. So the whole market has Apple earnings. They know Microsoft earnings. They know Google's. They know Amazon's. They know Tesla's. They know Meta's. They just don't know Nvidia's. Once they have Nvidia's, that's it. That's enough. So over the next several weeks, right, they'll be like, okay, let's try to model what the future holds for next quarter. And if enough of the narrative is bearish, if nobody here comes in and saves it, right, at 2000, whatever, let's say the war happens with Iran or whatever, and this thing drifts lower and lower and lower, and then suddenly breaks it, that's going to be the ice here, for me anyway. Then It's flush time. It's going down, and it's going to take the whole market with it because all you need is 7 stocks. Okay, market's open. Let's see where we're at. Bitcoin. Let's see where are we at. What we're going to do now, Bitcoin. Are you guys going to puke today? Or we're just going to puke? So this is it. This is the line. $66,173. If it can't make it above there and go back up to 67,487 by the end of trading day today, then expect it overnight to just roll over and go back down to 64. And then Nvidia's earnings will come Wednesday after the close. Okay. And then by Thursday, you'll see if Bitcoin is at 60K again or 50K on Thursday. That's what I'm waiting for. Now, if it's all good, hunky dory, we should be able to get up to back to 70,000. All right. And if you look here, let's look at the way things are. You compare this to this, right? Compare this to this. So let me draw something here. See if I can draw with my trackpad. Let's do this like here. You can see this, okay? And you can see all the volume here, right? So you see the volume. So there was a lot of volume coming in, and it couldn't make a significant new low from this one, and then we started pumping through the top of this yellow area, and then we just escaped it, and then we went all the way through the weekend up here. That was last weekend, right? And then once Monday happened, it started drifting back lower, you see, because yeah, it's not ready, right? Once you make a significant drop like here from 89,000 to 60,000, this range should be very long, very large, I expect. Usually when Bitcoin does these moves and makes a significant leg down or significant leg up, it takes about 55 bars. So or 55 days, 55 days, okay? And I don't think it's going to take that long this time around. I think there's going to be something really that's going to shake people out. Because if we just puke this week, then there should be enough buying strength down here, 60,000 and below, to create enough pressure to force it back up very nicely. And that will cause people to start chasing it. So all the retail guys will start coming in and bid it up, right? So the smart guys are waiting for this 50 to 60 again, because the people that stopped it here already got out, because this is a trade. This was a trade. Going down, you trade and go back up, and you stop it at a significant area, because 60,000 is very significant in a lot of ways. Let me show you. So if you look at this, you see this was the old high in 2021, right? Between 61,000 and 66,000. So of course it makes sense for it to stop there. Another reason why it would stop there, okay, was because if you look at the moving averages, the 40-month moving average was right here. So when you see these two lines converge, this is a very good stopping area. All right. So that's how I do things. I mean, you don't need to listen to that, but I keep things very easy. So, and if you look at the daily, you see this, the daily 18 moving average, it acts like a hand over your head. So if somebody's swimming, right, and then they come up from underneath the water, and then you just put your hand out and push them back down into the water, that's what that line is. That line is basically me putting my palm over somebody's head and forcing him back down into the water. So this thing acts like that. So 18 and 40. I always use 18 and 40. This is Joe Rabel's moving averages that he uses. He's basically, over the years looked at every moving average, and he found 18 and 40 to be really good, because you use 18 and 40 everywhere. So on the monthly, I use 18 and 40. On the weekly, I use 18 and 40. On the daily, I use 18 and 40. So that's really good. And then we go down to like the hourly or whatever. But Bitcoin trades 24 hours a day. So I use a factor of 6. Okay. So 6, like, well, a week is 7 days, but let's say it's 6, all right? And so we use a divisible by 6 rule here. And so 4 hours is where I go down on Bitcoin. So that's why I use 4-hour bars. So this is where I use the 4 hours. So we'll see how that goes. All right, we'll see how that goes. Now, the other thing too is to look at the volume here. You can see volume coming in here, and we again tested that lower bound of that yellow area before coming back up. But you see, like, you have maybe not as much volume as you did here, but still significant, right? And it didn't even go far enough to go back to the top of the pink area before rolling over again over the weekend. And so, yeah, it's clear that if Monday rolls around, Sunday to Monday, that it was going to go back down. Like, there had to be a significant reason for it to go up after all this volume came in, because this volume coming in here up till Friday, and you can see Friday was interesting because when Friday's news came out with the tariffs and all that, look at that. Look at the way it did it. It's like there's so much volume here, but look at the result of that. So there's all this effort, and this is the result before the weekend. Like, you would think that tariff stuff would be more significant. It's like the QQQ, the S&P. So the Nasdaq and the S&P, they all had the same type of thing where it was like zigzag, zigzag, zigzag in the first hour of the morning, and the market just didn't care. It did go up, but eventually it lost it all for the Nasdaq and the S&P. If you look at the S&P, so this was Fridays. So you see, so it was going to Wednesday, and then Thursday it gave it all away, and then Friday it just went up, but not by much. All it did was recover what it lost since Wednesday. So really no result. You have all this effort and you have no result to show for it. You really didn't go anywhere. So that's not a good sign. That really isn't. It won't take much for it to drop back down and go lower. And Bitcoin should lead. So if Bitcoin today just sinks lower and lower and lower back to the bottom of this thing, and the Nasdaq just goes flat, be careful. Any bad news from now into Nvidia's is enough to just crash and freak out whoever's holding hope that that Nvidia can save this market. All right, let's continue on. So the morning earnings was, what did I say? WGS, Gene DX stock. How is this one? Oh, boring. Nothing. Oh, that's lame. Oh, that's lame. I was expecting some big news to happen here. Okay, so if you look at this chart, this stock is an amazing stock. In 2023, we went from $1.36 all the way up to 84. Beautiful stock, right? And this was in November 2024. But in 2025, it's gone nowhere. We've been going flat. So I've been waiting to see if we finally are ready to go and support this 82 area. So if we go below here, I might be willing to buy. All right. Like, let's say it drops 62,000. Let's say the NASDAQ drops and this thing follows the NASDAQ down to 62,000. $62, maybe $40 even. I'll buy it. I'll definitely buy it for the chance it can go back and return up here near the IPO high in 2021. $800. You think I can get 40 to 800 on this stock? I don't know, but I'm willing to bet. Okay, so I'm willing to bet. So if this thing goes down to 40, it holds, the NASDAQ recovers, get this guy, get this one. So this thing will be the same category as Moderna, all right? So we want, oh, Moderna's up 5%, see? So this one's already happy. This one's already ready to go. This is a great looking chart. This is a good base. Very nice base here. Nice, 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 nice. I have another stock for you guys that I want to add to the boomer portfolio. There's an ETF called Crop. Okay. This one's real interesting. Really interesting. There was 2 places here where there was a lot of volume. Here and here. And it's been in a range and it looks like it's breaking out. The largest holding in this ETF, KROP, is a Japanese stock, like the Japanese version of Deere. So we have John Deere here in America, but they have their own version of John Deere in Japan. And Japanese stocks are all the rage. So Japan is the place to be. There's Japan, Brazil, and Mexico. Those 3 places, I think their stock markets are going to have a great time in the coming several years. So if American stocks are no longer the place to hide out for good, easy gains, then it's those 3 countries that'll have a nice return. So definitely Japanese stocks. And I can't buy Japanese stocks, right, without opening a brokerage over there. So the next best thing is to try to find ETFs with Japanese stocks. And this is one of them, KROP. And I know John Deere is doing well. The Japanese version of John Deere is doing well. I know that farming is going to be a big thing. Fertilizer, farm equipment. Yep, this is it. This might be the ETF to be. Okay, so this used to be $70-something back in 2021. So maybe this is it. This is going to be a good one. This will have a good return. All right. Okay. Anything else? No. Okay. Let me play another video. Play another video for you guys.
I wonder, Bruce, if after such a aggression and non-continuation immediately, if we have a bar like this tomorrow, then we would be thinking like, wow, now we have a lower high. We do not have any more higher highs like in this series right here. That would be a lower high. And that would put market into the vulnerable state. If we have something like this, and then with the suggestion that we're going to retest like this area right here, this time it will be broken, and this time it will go here. So I'm thinking like if we're coming back to that Mag 7 chart, so if we go to 55, that kind of is in line with that type of reaction in the market.
All right, so I think as you can see, like today and all the other days, we've gone sideways, right? Really, with the S&P, we've really gone nowhere. So I don't know if we're gonna break it or not. We'll have to wait for NVIDIA for sure. But you can see, like, yeah, we just been going sideways, man, this whole year. And if you count like this area in December, so December, January, pretty much almost done with February, we've gone nowhere, S&P 500. But this is why I don't care about it. If you were in UwU, up 4% today. Yes. So if you bought it when I told you guys to buy it, okay, if you were looking at the Urban Landlord, though, we were suspended. So you had to go to my channels. Remember to subscribe to my channel. So if the next time we get hit by a strike, you know where to find me. Okay. Give crack to me. GIVECRACK 2 me ME. Okay, on Kick and YouTube. All right. So you can find all that. And every description I have a list of stocks. And I'll have to make playlists and things too of all my things. And we're gonna have to expand the project and have different types of streams for different types of people, I think, eventually, once I get the Substack running. But yeah, this is easy, right? I expect to get 100% gain in a couple more months here. So telling you guys to buy it. at the beginning of February. Yeah, I think this should be easy to get. And then after that, we'll decide what to do, because I think it can go a lot higher in the coming years, especially if the wars around the globe keep increasing and supply chains keep tightening, and China keeps sucking all the oil. Then I think, yeah, oil prices will go up a lot higher than people think. Inflation will keep increasing. We will have hard times coming. You have to remember, we're having inflation at a time when oil is really low. Okay, at 50 something barrel, $50 a barrel, and now it's only gotten back up to 60 something a barrel. What happens when it gets back up to 80, 100? Like, blue states still are very expensive, man. I live in California. It's still like 4 or something, right? In a lot of gas stations. Maybe you get lucky, you can see a $3 something gas station, though, a gallon gas station, but that's it. So it's gonna get worse, definitely. All right, and it trickles down to everything you buy, because you need diesel to transport things. So all your goods will increase. So if you buy crap from the grocery store, that's gonna hurt. They're gonna add that to the price of every commodity out there. That's why energy prices really affects all sorts of inflation down the chain, downstream. Okay. Carvana is another like thing to look at, huh? So if you wanted to start short something, maybe Carvana would be it. So last time I showed a chart of the cycles for car sales, and we're at the top of car sales. So if you're waiting to buy a car, if you can wait like maybe 5 years, you probably can get cars a lot cheaper. And I don't know if how that will spill out to used cars, so reselling of cars, but I think all these will follow, right? If people aren't buying new cars, yeah, used cars will definitely. They've been deflating quite a bit since COVID. Used cars used to be quite expensive during COVID when they couldn't make those chips for new automobiles. So then people had to resort to buying used cars. It's gonna keep making it worse. So once Carvana breaks this 300, if you're looking for some place to short, Carvana is probably the easiest one. Yeah, because I think once this starts breaking a lot of support areas, once it gets to 300, then you'll see if it can go through 180 and then down to 130 to 110, right? Then you're gonna start thinking it's got to go down to $30. So any of you guys out there looking for a short, maybe this is the one to get. Yeah, because I think, yeah, the next 5 years, 7 years, we're gonna have very poor car sales. And let me bring up the chart that I showed last stream. I think it was last stream. Okay. All right. Let's get rid of these. All right. Okay. All right. So let's study that for a bit here. Okay. So what do you see? Total vehicle sales for 13-year cycle, right? And he used data from 1976 all the way through 2015, and he projected it forward. And so we're at the top. So going forward, we should see a bottom in vehicle sales around 2035, so 10 years time. So probably starting around 5, 10 years. If you can wait at least 5 years, it'll definitely get people away from cars, given this. And now let's look at some stocks with this, like GM and Ford. Look at that. So we put that cycle in there, the red, and then you have the two stocks. GM is the black one. GM is doing quite well. compared to Ford. Ford's always been a laggard. So if you wanted to short some car companies, yeah, GM would probably be it here, right here, because starting in 2027, we're going down. So yeah, that's the key. Okay, guys. That's all I gotta show you. That let me get my power in. Okay. Anything else I want to talk about? No, I don't think so. So I'm going to be looking at some other stocks. So this is like some industrial stocks I've been eyeing. So you can take a screenshot if you want, but I'm going to have to look into which of these I want to add to the boomer portfolio. Okay, there's going to be some of these I might take in or take out. So this, you see some defense companies, you see some oil and gas companies, piping companies, pipeline companies, I mean, trucking companies, especially chemicals. Yeah, we have some fertilizer here, food products, and aerospace, and a couple of utilities. So yeah, more of these industrial type boring boomer stocks. That's really where people are going to run into. And they done quite well for the past couple months in the year, right? You see that? Like 25, 50%, 15. These are good for 2 years. I mean, 2 months worth of performance. Like, will they continue? That's the question. So yeah, I'm definitely looking at these. And Deere is like going to be my favorite, I think. Because I talked about Deere like what, last year and 2024, so it's finally breaking out. Do I want to like buy more of it? That's the question. Do I recommend you guys to jump into it? Is another question, right? So it hasn't been doing anything and it's finally we are breaking out on Deere. So yeah, 42%, man, in 2 months. That's really good. Okay, so let's go back to some videos again. I think I'm gonna play back some Martin Shkreli stuff. Okay, yeah. So I played this video before, but I'm gonna continue. Let it play a little bit longer this time.
I love the idea of never.
Okay, let's see. Let me start it at
Over
2 minutes,
3 years. Maybe you want to buy that for, I don't know, $6. You want deep discounts. Super Micro, 22 million shares, down 7%. Now, in a situation like Super Micro or GameStop, or even D-Wave, these are stocks where the market is trying to figure out what the price is. And it's the market is telling you something is wrong with this price because people are trading, and a trade is a disagreement. A trade is, I want to give you cash for this stock, or I want to give you stock for this cash. And the more people that disagree, the more likely it is that, one, the price of the stock is not exactly correct, and two, that maybe the price of the stock is going to become corrected. That's just, a good way to think about it. Volume is disagreement to me. I'll call it 50 or 60 billion dollars have traded on these 25 stocks. So, the market sometimes is a little smaller than you might think. Is volume really disagreement? I think so. You've decided to change out your holding for cash or change out your cash for the holding. It's a big decision. Something forced you to do that, whether it was the price was attractive or you think the price is going to become less attractive or more attractive. That's portfolio size.
So I just wanted to play that section first because that's important. Volume is disagreement, which is like, I think it's a good way to talk about it. That's why I focused on the volume, right? A lot of places I said, there's a volume, there's volume, there's volume. But what comes after the volume is also important. How does the price react after all that volume came in? If you see the price move in a certain way that's different from the past, where you saw similar volume, then you would expect something different to happen, right? Just like with Bitcoin right now, we couldn't get to the top of that pink area. So, of course, I'm not surprised that today it started dropping again. Now, will it drop back to the bottom of that pink area is the next question. If it does and goes through it really quickly, then we will see very soon 60K again. And if fear pumps in and people get scared, yeah, 50K is in the works.
Sizing. Somebody asked about sizing. That's where I was going with it. Okay. So here's what I was saying in my Discord last night. So let's say you have $100,000. You know, a lot of people want to hit it out of the park. What if you just tried to make $500 trading? Okay, one trading day, $500. Doesn't seem like a lot. Maybe even make it, $250. $250. That's your goal. Make $250 consistently. If you could do that, you'd be really proud of it. But a lot of people, they want to see their account swing like crazy. Try to make $250 today. That's all you really need to do. And so let's say you do that. Your account value is now a little bit higher. Trading days go by fast. It's only 200, 250. Now some days you're gonna maybe have a loss. Okay, so let's do what? 365 divided by 7 times 5, 260, say minus 10 for holidays. This is kind of year one. You're up 60% if you do that. Now you might say, I made $60,000, big whoop. If I'm just living off of that, it's not a very high lifestyle and I have to go back down to 100K all over again. Trading requires time and patience and focus. It's a little frustrating for that, but assume you can do this. Maybe even you could do it with a machine. We'll see. Maybe I can give you that machine. All right, let's say when you reach 200K, which is somewhere in the early part of year 2, you say, I'm gonna up my threshold. I gotta make $300 from now on. 250 is too small. I need to get up to 300. Let's say you get up to 300K. That's happening around the beginning of year 2. And you say, I need to do 400 now. 400K. That's around year 3. So I'll have to make 500 a day. Now 500 a day is pretty, it's starting to get a little tougher and tougher. But the point of this story is that you should be adjusting the size of your portfolio to try to accommodate for, let's see, so what is this, a 25 basis point gain, right? See, when we bumped it up, we didn't bump it up until right here. Where did we bump it up? 200K. We said go from 250 to 300. 300K, we said go to 400. At 400K, we said go to 500. At 600K, we said maybe go to 700, or how about 800? At 700K, which now these numbers are going by much more quickly. Go to 900. 800K, this is only taking a month or two. Try to get to 1,000. And here's 100K to 1 million in 7 years. And the highest return you have to make is 25 basis points a day. Now that's not easy, but you only have to do that for 8 days. And guess what? It's okay if one of these days you're set behind. Yeah, this is without taxes. It's without a lot of things. The point is, consistent small gains will add up. Yeah, you're not going to be able to do 25%, 25 basis points a day.
Okay, the whole point of me showing you that is like to tell you that I don't trade this way. I don't waste my time with small trades and try to make a bunch of consistently small trades, okay? This is why I gave you that George Soros thing first. I look for the big, massive gains. Like if I think something like oil right now, or semiconductors last year, or Palantir 2 years ago, if I think those things are going to go up big, I put all my eggs in one basket, basically, for one huge mega trade. If I think this is the trade to make, I just sit on it for many months and trade that way. I don't go around doing day trades or many small swing trades or something like that. That's too tiring, and it's just too hard for you just to assume that you will make a certain percentage gain each time. put that profit back into the next trade, go back up, and then keep on building. Okay. And we went over through this math like maybe 3 weeks ago when I did the whole presentation on it. And let me refresh your memory a little bit and tell you, like, okay, in theory, you could do it this way, but like, watch. All right. There's 250 trading days a year. Okay. So assuming you just use like the normal market opening and take into account holidays and stuff like that. I'm not talking about like futures. Futures can trade over the holidays sometimes. And if you use crypto, you're going to trade 24 hours, 7 days a week. So I'm not counting that. But let's say you have 250 trading days a year. All right. And so that means you have about 62 trading days a quarter. Now I'm going to limit myself. I'm not going to do one trade a day. I'm not even going to do like 10 trades a day. I'm going to say I'm going to do 20 trades a quarter. I'm restricting myself. So these trades better be damned good. Okay, very solid trades. Let's say I do 10% gain on each trade. That's very good. That's very good. Pretty damn hard to make consistently. But let's assume I can do that. And I compound everything. So that means I take my profit and reinvest it. Now, after the quarter, after 3 months, so 60 trades, I stop. I go back. So let's say I start my brokerage account at $1,000. After 3 months, I go back to 1,000. Okay. I restrict myself again. I don't take all my profits from that quarter and go to the next quarter. After 3 months, I go back. I take my money. I cash out of the casino. I go back to 1,000. Okay, so this is how I do it. So then what is my profit? So that's basically 10%. So 1.1 to the power of 20 trades a quarter. Okay, so I'm compounding that gain of 1,000. I basically make $6,727.50 per quarter. And then each quarter I reset back to 1,000 on my brokerage account. I take my $5,727.50. I take that out. I put it in a mutual fund or something boring maybe, or I put in bonds, whatever. Who knows what you do with it? I don't care. But you basically say that's mine. I take it out of the casino. All right. And so I do 4 times that. So every year I make about $22,910 from my $1,000 initials. Okay. So that's my total profit of the year. Okay. That's not bad because that's basically 2,291% gains, right? So that's a 23.9 bagger. So now let's say I don't use $1,000. Let's say it's like $10,000, $100,000, something like that. Are you gonna do this? Are you really telling me 20 trades a quarter, I can make 10% gain on each trade? Is that possible? It's only possible if you find very solid trades. So when you look at UwU, how much did you make if you listened to me? If you listened to me and bought UwU at the beginning of the year, you're at what, 20 something percent? So that's one trade, right? Now I got to find another like big trade to make, right? That's only one trade I made in the whole quarter, right? So that's why it's hard, because you want to find some solid trades you can make every time, 10%, 10%, 10%, and compound it. That becomes very challenging because you're under a lot of pressure. You have time against you. If I'm relaxed and I just buy UwU and I just need one trade, like a 30%, 50% fat trade, right? I'm chilling. Or I get Moderna, maybe it'll give me 100% in another month, right? Then I'm really relaxed. But that means you already have a lot of money. So for you guys, if you are thinking like you can turn $1,000 into $22,000, okay, good luck. You know, if you can do that consistently, then you might as well up it up to 10,000, 20,000. Or you could, if you're really good and really advanced trader, then you could say like I could do 60 trades a quarter, or 100 trades a quarter, or 200 trades a quarter. That's what Skrully was showing you. Skrully was showing you like, what if I just made 1% gains, or very small 0.25%, right? The basis points were really tiny, but but I have to do that every day, like every day, 0.25, 0.25, 0.25. I put it back. I get it. That's the problem. I think you'll find it quite challenging to be consistent like that, because you're not taking into account that you're going to lose some of those trades. Some of those trades you might lose 1%. Like if you hope for 0.25, 0.25, 0.25, and then you hit like a loss of 1%, that takes you back a lot. That could take you back. If that 1% hit you in the middle of your whole session of the year, you know, that could take you out, because then your mentality starts changing. Maybe your psychology starts changing. Maybe you're going like, damn, man, I lost 1%. Holy shit, man. I thought I was having a good system here. Then you second guess yourself. Then your psychology changes. So trading is really about psychology. It's the human behavior. I don't think you can find a system where you can consistently do 0.25, 0.25, 0.25. If you did, you know, you could just make a trading bot, and do it. If that's so easy like that, everybody can make a trading bot. Shkreli could make a trading bot and not even like tell you anything, right? So that's why these are the challenges we will encounter as we go on through here. There's always going to be noise. There's always going to be factors to take into account. There's gambles. These are gambles, okay? And this assumes that you will go to the casino and always hit. Like, if I bet black, I get black. If I bet black, I get black. If I bet black, I get black. That's not the case in the casino. The less time you spend betting in the casino, the better off you are. The more you spend looking for the bets that return the best results is the way I want you guys to think about. You want to look for the fat returns, right? You look at Deere, you look at Moderna, you look at these stocks that have these ranges. That's why when you look at technical analysis, it's not a crystal ball, but at least it tells you, hey, if I bet on this stock, there's a better chance of me getting this return. Rather than you just guessing like, well, I don't know, pick this AI stock. Maybe this will do well. That's hopes and dreams, my friend. Hopes and dreams. So I should go balls deep. Yeah, that's what I'm doing. I'm balls deep in oil, man. I was balls deep in freaking SOXL. I guess I should have told you guys I was doing balls deep in SOXL, but I didn't know how stupid people were, and they were going to buy memory like Micron and all that stuff, and DRAM prices were going to shoot up. Because if you look at semiconductors, like if you looked at Intel and Nvidia and AMD, you know, just those three, you would have been like, this whole sector is kind of like bleh. But then all of a sudden the other stocks started carrying it, like ASML, you know, and then you saw some of the other guys like Broadcom kind of start carrying and take over. So semiconductors had a good kind of rotation. So even inside the semiconductor sector, there were all these companies that were taking over from Nvidia. So even though Nvidia was flat, right, and AMD kind of took over from Nvidia, and then once AMD started going like blah, started puking, then Intel started taking over. You see? So overall, the ETF went up and up and up. So even though if you just bought those three and they just rotated around each other, it didn't matter. The whole ETF started going up because some other company was taking over for it. Yeah, so I didn't expect that. Honestly, I did not. Oil is a lot easier to predict because oil just follows the crude oil prices, and commodities always have nice bubbles. Just like you look at silver and gold, if you bought gold and silver mining stocks in 2024, you're up big, right? Those stocks just follow the price of gold and silver mainly. Sometimes they'll have to discount the price of energy because it takes energy to mine the gold and silver. So if oil prices went up, that would start affecting those prices of the gold and silver mining stocks. But luckily, oil prices and natural gas prices were still flat and down, right, into 2025. So when gold and silver started pumping, those gold and silver mining stocks pumped even faster. So hopefully with the oil stocks, it's the same thing. Oil starts to pump up, and we'll see a very good returns on oil companies. So yeah, so oil and gas and all that servicing companies. That's right. So that's how you should think of these things. Okay. I do not recommend you just do like, oh yeah, I'm gonna go every day and try to find 10 trades a day and make them all go up at 0.25%. Like, you're gonna stress yourself out. You really are. You're just gonna make yourself tired. You're a human. You're not a robot. Okay. If you think you're gonna go to the casino and continuously get the correct bet each time and compound it, nah, man, I think that's too much of a challenge. So hopefully you understand that. Yeah, because I mean, I could talk about the Kelly sizing again, but you can go back to my old presentation on that this year, and I talked about it before too, 2 years ago. The same thing. It's just basic concepts. Maybe one day we can talk more about the Kelly criterion. There's something called the Kelly-Thorpe betting strategy. Okay, nothing to do with Grace Thorpe and what they're doing at the casino, but yeah, it's funny, right? It's called the Kelly-Thorpe strategy for betting. So you can look at the same way people go to the casino and size their bets, and you can apply the same thing to options trading. So they call it the Kelly-Thorpe formula, but yeah, you can look it up. Kelly-Thorpe. Maybe it's this thing. I don't know, but yeah, I'll just have to make a note of this for myself and to talk about it some other time. Okay, and this is the website you would use if you want to experiment on the Kelly criterion. Okay, so you can go here. So this is how you size your bets. Let's play a game. I have a coin that lands heads 60% of the time and tails 40% of the time. You have $25 that can bet on either side of the coin. Every time you're right, you double your bet, and every time you're wrong, you lose it. What would your betting strategy be? Well, what would your betting strategy be, guys? Let's see. Let me bet something around here. And we know that 60% is heads, so I'll keep betting heads forever. Heads, 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 heads. Oh crap, come on, man, I'm almost there. Let me get out of here. Let me retire. Come on. Oh, fuck you. All right, you get the idea, right? So that's what happens. Now, let's say you're impatient and you bet like this, like you bet $15 or something each time. What happens? Bet. Oh, damn! I did it! I retired! Yes! No! So, okay. What if I'm a real I feel really lucky. Let's bet it all, baby. Let me retire in 2 years, man. Come on, let's go. Come on. Oh, damn it! I got wiped out. See? That's the same thing. So, I don't want 60-40. I want something where I can know it's 90% that I'm going to win, right? So that's why I do the technical analysis. I want to figure out which ones look like a 90% win, and I only bet on those. I'm not going to bet on everything out there, all right? I'm going to chill, relax, wait for the time, and then I bet, okay? Maybe it was a time to bet in semiconductors. Maybe it's a time to bet in oil. Maybe it's the time to bet in Lululemon. I don't know. But I'm not going to chase everything that comes out. All right. I'm going to conserve my energy. And that's what you should do too, because you're not going to waste your time staring at charts all day. I don't want to either. So that's all I'm trying to tell you guys. All right, folks. I'll see you around. I think John and Be Brave are going to stream something if they haven't turned on their stream already. So check them out. They're going to talk about race and whatever. I don't know. Bet on black, bet on white, bet on yellow, bet on brown. Oh, it's up to you guys. But I will see you later. Hopefully we can keep your powder dry for sure. And keep your energy and sanity, because you don't want to be stressed out and hunting for a trade that doesn't need to be there, right? You don't want to be a streamer, right? You don't want to be a streamer. You don't want to be a guy who relies on super chats every day. All right, guys. See ya.